That's. I mean, when I look at that, my question is, why are we, where you are at 62 million, call it 63 million, right? I mean, and my question is, question should be how good is Antler, or what is the issue with Antler in terms of that? My looking at numbers and stuff.
Yeah, I think particularly over the last 6 to 12 months, we've probably been caught up in global concerns about inflation. And we saw probably from December, January this year, then the investment community started getting a little bit more cautious. And with that, the copper price started coming off as well, because the view for economic development globally was somewhat muted. As that happened, our share price started coming off, and as that started happening, then some of the institutions that we had on our register started selling out, particularly in the lead up to June 30, where I guess they're rebalancing their portfolios, and arguably some of them needed to go to cash under their investment mandates, and rightly or wrongly they elected to sell down out of New World. And we stabilised about at that point at about 3.2 cents, and around about that level we've traded pretty stationary on our chart, around 3.2 up to maybe over the last couple of weeks we've got up as high as 4.5 cents, but we have been pretty stable around that 3.2 cent mark. Now, I think as concerns about inflation are starting to become a lot more subdued, I think there's acknowledgement that the interest rate rises are starting to have effect, and inflation may not be as big an issue, or maybe it's been brought into check. And with that, I think there's a view that economic development is about to start again, and we're seeing the copper producers, firstly BHP has made a bid for Oz Minerals. So that's indicative that BHP is taking a long-term view on copper. We've seen Sandfire, who's probably Australia's next biggest copper producer, their share price is going up. 29 Metals, who's another Australian producer, probably not quite as big as Sandfire, their share price is going up. But the emerging producers like New World, and we can put KGL, Eagle Mountain, Staveley, Hillgrove in that basket, Peel Mining, PEX, then the emerging producers, if you look at our charts, then we're still all pretty stationary. So I think we're yet to move. But I think it's only a matter of days or months before we do, because the world is identifying this demand for copper. And so the initial focus is on the producers, and subsequently it'll filter down to the emerging producers. And in my situation, I think we've got a compelling case where we have the highest grade on the ASX, we're closest to production, we're in a fantastic jurisdiction, and I anticipate that we will move in advance of everyone else, and we will outperform everyone else in our peer group.
Some of the names that you mentioned, I think you guys are way above in terms of the next cap of the companies to go into production. I'm looking at your numbers and stuff. It doesn't make sense for you guys to be where you are. For me, in your presentation, you talk about you got high grades, you got lateral continuity and vertical continuity, which really is sort of where I was trying to get at with the previous question about grade variation, because to me, you're obviously not having a problem trying to get your grades together, your numbers together, because everything seems to be, I've heard of many projects where it's really hard to get that, and and when they come to modelling it, it's they're trying to model little tight things to get the numbers, but it seems that you're pretty okay on that front, right?
Well, at present, and we've only drilled to this point in the last 2.5, 3 years, we've only drilled over a strike distance of 600 metres. That's it. And the reason we've done that is because almost every single hole over that 600 metres has intersected massive sulphide mineralisation. And as we go deeper and deeper, we hit more and arguably better mineralisation. So to this point, all we've modelled, all we've intersected is one continuous ore deposit. Now, when we look at how much of that is mineable, In November 2021, so 12 months ago, that 7.7 million tonne resource that we declared, 95% of that can be mined according to the mine design that we incorporated into our scoping study. That's an extraordinarily high conversion rate. We're calling it a mineable inventory at this point, as opposed to a reserve, but it's only a matter of time before we declare a maiden reserve. Now, normally you'd expect a resource to reserve conversion of maybe 50, 60, a good one would typically be 70%. In our case, we believe 95% of that resource can be mined, and that means that as we now do an updated mine design and a mine schedule on the new resource, which is now 11.4 million tonnes, we expect, again, it's one continuous deposit, we expect conversion there to be very, very high as well. So if we can mine 95% of that 11.4 million tonnes, we can now mine 11 million tonnes of mineralisation. There'll be a bit of dilution. Let's add another couple of million tonnes of dilution in there. All of a sudden we can now mine 13, maybe 13.5 million tonnes will be delivered to the mill over probably a 10-year mine life. So our production profile is likely to be 1.2, 1.3, 1.4 million tonnes per annum over 10, 11, 12 years, instead of the scoping study that was looking at 9.3 million tonnes mined over 9.5, 10 years. So we'll probably be producing 20 to 40% more metal every year over a longer timeline, and with a larger production profile, operating costs will come down. So what are already extremely robust economics will just look better and better and better because we have a bigger deposit.